Attendees are in listen-only mode.
Good afternoon, everybody. We're going to start the webinar in just a couple minutes. Folks are still coming in, and thank you for your patience, and we're looking forward to getting started. Thanks.
Good afternoon, everybody. This is Deputy Commissioner of Energy for the Department of Energy and Environmental Protection, Vicki Hackett. And with us today on this call, we have representatives from the Department of Economic and Community Development, the Connecticut Green Bank, Eversource, and UI. And we just want to start out by welcoming you to this call, and we want to acknowledge that, you know, we're all facing significant public health challenges at the moment that are having a real impact on your business models, and that we're going to continue to engage in outreach and work with you so that we can come out on the other side of this with a strong clean energy workforce in Connecticut. We want to recognize the clean energy businesses that have taken us decades to build up in Connecticut, including over 40,000 clean energy workers in energy efficiency, clean energy generation, alternative transportation, clean grid and storage, and clean fuels. We reached out to over 2,000 contacts for these 3 webinars that we've hosted. This is the last in the series of 3. They have been updated each day as new information has become available. I think the most important thing for us to stress, it's available, and we do expect that it will be fully subscribed. So it's really important to get out there and apply for the assistance that you may need right away. So I'll just do a quick highlight of the agenda. We're going to have an update on COVID-19 and some information about unemployment insurance. Tommy Hyde from the Department of Economic and Community Development will do an update on that. Tommy will also talk about state assistance, including the bridge loan that was offered by DECD. And then Tommy and Brian Farnan from the Connecticut Green Bank will talk about federal assistance that's available with a focus on the CARES Act and the Paycheck Protection Program. And then we'll have questions and answers moderated by Matt Masunas of the Connecticut Green Bank. We're also going to be sending out a survey probably towards the end of next week to get more information on how your businesses are doing. And that will be really important for us to gather that information now and again over time to sort of keep track of the impacts that this is all having on the clean energy industry in Connecticut. Please note that if you have any questions, you can type them into the question box so that we can respond to them at the end. And we're also recording this webinar and we'll distribute it to contractors later. So I'd like to start by introducing Tommy Hyde.
Thanks, Vicki. Hi, everyone. Again, my name is Tommy Hyde, and I work for the Department of Economic and Community Development. Just want to give a quick thank you to the folks at DEEP and Green Bank and the governor's office who have helped make this possible. Next slide, please. So a quick update on COVID-19. We tried to create a one-stop shop so members of the general public can really go to one place to find out all the updated information, and that's right on the governor's website. So any updates from unemployment to business assistance across the board, we encourage you to visit ct.gov/coronavirus. As I'm sure many of you have been watching the news lately, there are currently just under 7,000 laboratory confirmed cases of COVID-19 in Connecticut. We hear a lot about getting to that peak time within the next few weeks, but it is important to know that the shutdown is likely to continue for several weeks, because just because we get through the peak time doesn't mean that everything's just going to open up right away. It is going to take some time. So the state so far has really tried to do three things. First is to cushion the impact on individuals and businesses. Second is to complement the federal actions, and some of that is through as you might have seen, through the Connecticut Bridge Loan, which we'll talk about a little bit later. And then third is preserve a V-shaped recovery. We don't want to come out of this with a slow economy. We really want to make sure as soon as we can to get the economy moving back and shoot straight back up. Next slide, please. So unemployment. So far the state has seen over 220,000 claims for unemployment. A normal year, the state receives about 180,000 claims. So you could just imagine the pressure that's been put on a system that is somewhat outdated and is actually getting ready to be upgraded. There currently is a 5-week backlog, but we want to let everyone know that claims will be paid retroactively, regardless of when you are finally approved. The state is looking at various automation solutions to speed up
I'm toggling slide changes. It might not be showing, and this is probably a technical limitation from the possibility that something dropped right there.
No problem. We're good, Matt. We got it now. Thank you. Sorry about that, everyone. So who is eligible at this time? Traditional employees that have been terminated or have received a reduction in hours eligible, but the Department of Labor is still working through what that looks like and how to onboard those folks. So at this time, we would ask that self-employed individuals not apply, but make sure you're checking back, as I said, the governor's website, the Department of Labor website, as they're coming out with continuous updates of when the self-employed should apply. And just to hit this point home, all payments will be retroactive, so you don't have to worry about missing out. So typically the level of benefits range from $15 to $649 a week. But with the federal stimulus packaging stepping in, the range now is about $615 to $1,250 a week, with the average Connecticut benefit increasing from approximately $400 to $1,000 a week. If you are, which we're assuming you all are, Connecticut registered businesses, the only way to currently file is filectui.com. So if you haven't filed already or you're planning on filing soon, make sure you use that website in order to follow your claims. Next slide. Okay. So a couple other highlights. So temporary shutdown. So if an individual has the employer registration ID number and a return to work date, the application will actually be processed immediately. This is really important for folks who don't want to obviously wait in the 5-week backlog, as this will give you a nice streamlined process to getting your benefits. There's also something called the shared work program, where employers can reduce hours by 60% and unemployment pays for most of the remainder, which includes the 600 plus. No, this process is manual. To check out the Department of Labor's website on what that entails, and know it could be an extended period of time before that would actually kick in. And then employers with a high number of unemployed workers usually see an increase in payroll taxes after the fact. We are not sure where this is going, if this is going to happen. It is currently under review. So unfortunately, we don't have much additional information on that at this time. And they have relaxed a lot of the requirements for unemployment insurance. For instance, typically when you file for unemployment, I think you have to apply for a job 3 times a week and show proof of that. At this time, that requirement is no longer necessary. Next slide. Yeah, you keep going, Matt. Great. So now we're going to talk a little bit about what the state assistance has been like. I'm sure many of you have heard about the bridge loan program that my department, the Department of Economic and Community Development, came out with, I think 2 weeks ago now. These were up to $75,000 loans with 0% interest for 12 months and the possibility of a 6-month extension period. We did receive over 5,000 applications in a little under 3 days, which had forced us to have to shut down the program relatively quickly. That being said, the original pool of money that was earmarked for this, if you will, was $25 million, and we've since added another $25 million to that pool. So the total funding available to all those businesses is currently $50 million. There has been a lot of questions out there as to whether or not the department will be opening up the bridge loan program to additional folks. And as of today, that is not happening. Not to say that something won't happen in the future, but as of right now, there are no plans to reopen the program. For those of you who have submitted an application, we did put a 7-day deadline for the follow-up documentation on there. And I want to let everyone know that we have since removed that. There were some backlogs with DRS and getting letters of good standing. So if you've applied for it and you've not submitted your follow-up documentation yet, note that you can still do so at this time. And if you rush to get your documentation in and maybe didn't fill it out completely, or didn't understand some of the requirements, we would encourage you to revisit those and make sure they're the most up to date. So when a program or a loan officer comes across your file and they reach out to you, there's a chance that they might ask you for updated information, and the sooner you can provide that, obviously, the better it would be for both parties. There have been a lot of federal programs, or there's 2 main federal programs with a few other smaller ones that are out there right now in the market. And I wanted to let you know, and we'll get into this a little bit later, but if you're planning on or have applied for the PPP loan, the EIDL loan, and the bridge loan, you are eligible to apply for all 3. If at some point, you realize I got my money from PPP or EIDL already, or you're just planning on utilizing those programs and no longer need the bridge loan, we would ask that you make sure, the money's in the bank, you're ready to go. And then at that point, reach out to DECD and just let us know you no longer would like access to the bridge loan. And one more thing I did forget to mention, and I know Vicki touched on this in the beginning. Again, we received over 5,000 applications in a little under 3 days. And we know the PPP loan specifically, there is a cap on that amount. And I think the EIDL one. So again, we just want to stress the importance of applying for this stuff ASAP. You don't want to be left out like a lot of people ended up being with the bridge loan just because the money runs out and no one's taking applications anymore. Next slide. So mortgage relief for residents and businesses. The CARES Act, which was passed 2 weeks ago, does offer several protections for homeowners with federally backed mortgages. Servicers of mortgages are required to provide 180 days of mortgage forbearance to borrowers attesting to COVID-19 financial hardship. They have instituted a 60-day moratorium on foreclosure proceedings, foreclosure-related evictions, and foreclosure sales for federally backed mortgages. And this 60-day period began on March 18th. Additionally, they have provided credit protection, so homeowners' credit score will not be impacted if you take advantage of one of these programs. Additionally, on the state side, on March 31st, Governor Lamont announced an agreement with over 50 credit unions and banks in Connecticut to offer mortgage relief to the state's residents and businesses who continue to face hardship due to COVID-19. Under the agreement, participating financial institutions for borrowers are offering mortgage payment forbearances of up to 90 days, which will allow homeowners to reduce or delay monthly mortgage payments for at least 90 days. Participating financial institutions will waive or refund mortgage-related late fees and other fees, including early CD withdrawals. Financial institutions will not start any foreclosure sales or evictions for 60 days. And again, late or missed payments will not be shared with credit reporting agencies, and therefore your credit will not be impacted. We would encourage you, if you need to take advantage of one of these programs, reach out to your bank. And then additionally, for those of you who are out there who either lease or rent your facility, please reach out to your landlord to work with them if you need it. Again, these programs are available to them, and we're hoping a lot of them potentially will pass through it on to renters and leasers. Again, more information on this can be found on the governor's website at ct.gov/coronavirus or the Connecticut Department of Banking website. Next slide. So paid leave and property tax relief. The United States Department of Labor and the IRS have published guidance on the emergency paid sick family leave programs that were authorized in the Family First Act. The federal government is paying the cost of leave up to $511 a day for sick leave and $200 a day for family leave. Employers of 500 or fewer employees are required to offer these programs, and these programs are good ways to supplement your employees while you're potentially waiting for a PPP loan, the bridge loan, or the EIDL loan. And then additionally, cities and towns have announced property relief and are required to offer eligible taxpayers one of the following or both of the following. The first being a 90-day deferment for any taxes on real property, personal property, or motor vehicles, or municipal water, sewer, and electric rates, charges, and assessments. So that was one. The other one they potentially are offering are reduced interest on delinquent tax payments to property owners under certain conditions. So again, all municipalities in the state must offer one or both of those requirements, and we would urge you to reach out to your local municipality to see which one or both they are offering at this time. Next slide. And at this point, I'm going to introduce Brian Farnan, who is the General Counsel at the Connecticut Green Bank, and to take you through some of the CARES Act.
All right, thank you so much, Tommy. And I can thank DECD, DEEP, and the governor's office not enough. They've been really great partners here. And one thing I did want to point out right away was that, Homeland Security did deem energy efficiency and renewable contractors as essential critical infrastructure workers. So as many of the hiccups and hurdles that you're now facing with permitting and client access and decision making, at least that's one less issue you have to worry about, and you'll be able to continue to hopefully do work, obviously following certain safe guidelines. Next slide, please. So I'm going to talk very quickly, high level, about the CARES Act. It was passed 2 Fridays ago. Last Friday was the first day that the program was opened up for applications under the Paycheck Protection Program, and other things that this is a huge bill. $2 trillion trillion in stimulus, passed in a bipartisan way. Direct payments, $1,200 for an individual, $2,400 for married couples with a $500 child credit. That phases down based on your income. There's also pandemic unemployment assistance. We talked a little bit about that already. And then things like paying employer payroll taxes, paying Social Security taxes. Those things are all being pushed back, trying to give people some time to get a little breathing room. Next slide. So let's talk a little bit about the CARES Act and small business cash concerns. So the big one is the Paycheck Protection Program. And I don't know, Matt, if you, next slide, if you have a chance, hopefully the Wi-Fi. He's worried about his Wi-Fi. My biggest concern is that an 8 or a 10-year-old are going to come storming in at any moment, either to talk or fighting. It's 50-50. So hopefully Matt can get to the next slide shortly. But I'll continue though. So jumping ahead to the Paycheck Protection Program, that's really the most important program, I think, for the purposes of this webinar and for your business. It's $349 billion loan program. As Vicki mentioned earlier from Deep, we expect that money to run out. So get your applications in this week, as soon as possible. And the key thing is a portion of those loans are forgivable, and we'll talk a little bit about that. But the big takeaway is start with your local relationship bank today. There's things that are called know your customer requirements. Post 9/11, banks need to know who they're dealing with. Your relationship bank is already going to have a relationship with you. They're going to hopefully be able to do it quicker than going elsewhere. Next slide. All right, perfect. Thank you. So what can you so if you are to get a loan, a forgivable loan under the Paycheck Protection Program, what can you use it for? First and foremost, payroll costs. Think compensation, payment for vacation, parental, family leave, sick leave, group health care benefits, payment of any retirement benefit. All those things that fall under payroll costs are permissible. Other things is payments of interest on a mortgage obligation. So you can't pay down the principal of your mortgage obligation, but you could pay down the interest. And this is important when you're talking to your banks about what your options are if you're having issues with cash liquidity. Rent is another one, and then obviously utility bills. And something I would ask you to think about is if you are to get a Paycheck Protection loan, think about what you're going to use those funds for, because it's limited. So if you have other cash available, use them potentially for other purposes with this, in fact. But that's something you may want to talk to your accountant or just think about yourself. Next slide is who can apply. And let's just keep this really simple. If you're a small business with less than 500 employees, including sole proprietorships, independent contractors, obviously LLCs, private nonprofit organizations, all those can apply. Just need to have less than 500 employees. And you think about it, there's a huge difference between someone who has 400 employees and 5 employees. So those larger companies are probably already working through their accountants to get, this loan process. So if you're a smaller shop, definitely jump on it today. Next slide. And how do you apply? Just, start with your local relationship bank. There's a live link here for you to see who the preferred lenders are. We'll go to the next page and you can see that list too. So if we can switch over, Matt, to the PPL lenders, that's the list. And the good news is pretty much all the major banks in Connecticut are going to be, on board with this. And one thing I would say is, I had a situation where one contractor was having problems dealing with one relationship bank, but they had a second bank that they were dealing with, and they were able to expedite by working through the other bank. So if you hit a hurdle, you may want to talk to a second bank, but hopefully that does not happen. Next slide. So let's talk a little bit about the loan details and forgiveness. So here, one of the big questions is, how can the loans be forgiven? So think of it this way: the debt will be forgiven if it's used in the 8-week period following the loan for purposes such as payroll, rent, mortgage interest, or utility payments, as previously discussed that. But you got to remember, any forgiveness will be reduced in proportion to any reduction in the number of employees you had as compared to the previous year, and any reductions in employee compensation that is greater than 25%. That reductions, they could be offset by the employer if you end up rehiring those individuals, or if you adjust those wages back up after June 30th. So that's one of 2 ways to hopefully address that, because the end game is you want to obviously have the loan be forgiven. Another thing is there's no need to shop between bank to bank to find the best terms. So the same for everyone. It's interest rate of 1%. You have the loan forgiveness component of it. The maturity is 2 years. Typically SBA has certain other requirements such as small business fees, collateral requirements, and other kind of personal guarantees. because of kind of the unprecedented times we are with the pandemic, those requirements are being waived. Next slide. Moving forward, so you don't have personal guarantees, and these fees are waived. So what do you need to do? Well, there is a self-certification requirement that you will need to sign when you do your loan application, and all the other owners of the company that are 20% and more would have to sign it, and it's those list of items right there. All right, and with that, I'm going to pass it back to Tommy.
Thanks, Brian. So another program that is out there is the Economic Injury Disaster Loans. CT was actually the third state in the nation to become eligible for these Economic Injury Disaster Loans, and they have been around for a few weeks now. As of last Friday, the SBA has processed 139 loans worth $31.5 million. So they are working through them pretty quickly. These loans are up to $2 million for businesses and nonprofits, with a 3.75% interest rate for small businesses and a 2.75 interest rate for nonprofits. There is the ability for principal and interest deferment, but it is up to the administrator's discretion. So again, when you go in and you apply to these loans, someone would reach back out to you and kind of talk through what you're eligible for. And at that time, you would talk to them about the possibility of principal and interest deferment if it's needed. Similar to PPP, they have relaxed many of the requirements to get the money out the door faster. For instance, if you're applying for anything under, or if you receive anything under $200,000, there's no collateral requirement for that loan. Next slide. So perhaps the most attractive thing about the EIDL loan is that it allows for up to a $10,000 advance within 3 days of applying. This advance basically turns into a grant that may be used to keep employees on payroll, to pay for sick leave, meet increased production costs due to supply chain disruptions, or pay business obligations, including debts, rent, and mortgage payments. It's important to note, so if you were kind of an early mover and applied for the EIDL loan right when it came out, and you did not have the ability to apply for the $10,000 advance, you actually have to go in and reapply through the SBA the same way you would have done the first time, but now you would see an option for that advance. You don't have to worry about canceling your previous loan. I've been told that the SBA can kind of see both of them and would remove the original application for you, but you do need to reapply if you would like to get that advance, and it was not an option the first time you applied. Next slide. This is a question that we hear a lot, so we wanted to address it head on. Can you apply for an EIDL and a PPP loan, and how does it work together? Whether you've already received an EIDL unrelated to COVID-19, or you receive a COVID-19 related EIDL and or emergency grant between January 31st, 2020 and June 30th, you can also apply for a PPP loan. If you ultimately receive a PPP loan or refinance an EIDL into a PPP loan, any advance amount received under the Emergency Economic Injury Grant Program would be subtracted from the amount given in the PPP loan. The one thing is, you cannot use your EIDL loan for the same purposes as your PPP loan. For example, if you use your EIDL to cover payroll for certain workers in April, you cannot use that PPP for payroll for those same workers in April, although you could use it for payroll in March or for different workers in April. So, make sure you are cognizant and keeping track of which funds you're using for which employees, because you are not allowed to use both loans for the same operations or employees. Next slide. So some of the other programs that were in the CARES Act, there is the Small Business Debt Relief Program, which will provide immediate relief to small businesses with non-disaster SBA loans, in particular 7A loans, 504 loans, and microloans. Under it, the SBA will actually cover all loan payments on these SBA loans, including principal, interest, and fees for 6 months. This relief will also be available to new borrowers who take out loans within 6 months of the president signing the CARES Act, which again was 2 Fridays ago. There's the employee retention credit for employers subject to closure or experience economic hardship. This provision would provide a refundable payroll tax credit for 50% of wages paid by eligible employers to certain employees during the COVID-19 crisis. The credit is available to employers, including nonprofits, whose operations have been fully or partially suspended as a result of the government order limiting commerce, travel, or group meetings. And the credit is also provided to employers who have experienced a greater than 50% reduction in quarterly receipts measured on a year-over-year basis. There is an option for the delay of payment of employer payroll taxes, which would allow taxpayers to defer paying the employer portion of certain payroll taxes through the end of 2020, with all 2020 deferred amounts due in equal installments, one at the end of 2021 and the other at the end of 2022. And then finally, they are offering counseling and training. So if you need a business counselor to help guide you through this uncertain time, you can turn to your local small business development center, women's business center, or scored mentorship chapter. These resource partners and the associations that represent them will receive additional funds to expand their reach and better support small business owners with counseling and up-to-date information regarding COVID-19. So with that, I think if Matt's ready, we will open it up to any questions you may have at this time.
Thank you, Tommy, and thank you, Brian. We do have a couple of questions for our panelists. They seem to relate to the circumstance of an employer needing to reduce salaries in the near term and what happens to some of these programs as a result. For Paycheck Protection Program, we would question, would we have until after June 30th to bring our salaries back up, or do we need to keep them the same from the beginning? I'll ask anyone to jump in, but my interpretation on this one so far is that loan forgiveness will be reduced if salaries decrease by more than 25% for any employee who makes less than $100,000 in 2019, and you do have until June 30th to restore full-time employment and salary levels for any changes that were made between February 15th and April 26th. Brian and Tommy, please jump in if you want to correct the record on any of that.
So that's accurate. You can offset if you do have to reduce hours or lay someone off. You can offset that by rehiring those employees or adjusting the wages upward. You just need to do it by June 30th, 2020. So we're saying the same thing.
Great advice. Related one, but to unemployment insurance. If we reduce our employees' hours to, say, 16 or 24 hours a week, will UI pay the difference in their pay? So between those two checks, and the employee will get the same amount weekly. And if so, will it be automatic, or do they need to do anything so unemployment insurance knows that it's for COVID-19? Do we know enough to comment on that circumstance?
So broadly, I did mention it earlier, the shared work program under the DOL allows you to reduce your employees' hours up to 60%, with the government stepping in to cover those wages. Again, I just want to stress that, DOL is currently inundated by unemployment requests, and their focus right now is on processing those requests. So for this shared work program, while you can't apply for it now, it might take some time to get it up and running and for you to get confirmation as to whether or not you're eligible for it. It is a manual process where I believe you do have to actually speak to someone about it. So there are some issues with doing it at this point. That being said, I would urge you to consult or to take a look at the Department of Labor's website, look at the shared work program and the requirements that it entails. Unfortunately, at this time, I don't know whether or not that would be retroactive, in the sense that if you applied today and you didn't get approved until 20 or 30 days from now, would those benefits be retroactive to your employees? Unfortunately, I do not know at this time, and we'd have to take a look. Yeah, I'd urge you to take a look at the shared work program, which can be found on the Department of Labor website.
Thanks, Tommy. Those are the two questions that we've got right now. We'll again encourage our audience to enter any questions they may have into the dialog box that they should see. If this is on mobile GoToWebinar, it should show up as a question mark icon. In the event that you're not seeing any of those due to technical difficulties, you can also email your question for immediate answer, or depending on timing for follow-up answer or interpretation best we can, to me, matt.macunas@ctgreenbank.com, as it shows on your screen. We'll keep the line open for another few minutes just in case questions come in. All right, we've got another question in. If employee payroll is covered by Paycheck Protection Program for 8 weeks, but the situation is not improved by then, can the employee still qualify for federal unemployment insurance bonus benefits?
Yeah, so it's my understanding that it's not the employer that's qualifying for those benefits, it's the employee that's qualifying for those unemployment insurance benefits. So it's those will be available to the employee who is laid off, and the employer is utilizing the Paycheck Protection Plan program to either hopefully keep them on or have a greater incentive to hire them back on by June 30th so that their loan could be forgiven. Does that make sense?
That sounds like it tackles the question head on. Thank you, Brian. Further questions, please enter them into the dialog box. And we'll keep the webinar open for another minute or two in case other questions still come in. All right, well, that appears to be all the questions we've got for today's webinar. We do want to thank everybody, our panelists, Brian Farnan from Connecticut Green Banks, Tommy Hyde from Department of Economic and Community Development, Deputy Commissioner Hackett from Department of Energy and Environmental Protection, of course, our utility partners and the Governor's Office for all of this mutual information sharing that we've been interpreting from federal guidance coming down through the state and on to you, the needed beneficiaries who we are eager to support during this time, especially making sure that the contractor community that's so important to us is sustainable and durable and has the tools they need to weather what's going on right now. So with that, we thank everybody for their attention and we are happy to be providing this information. Follow-up questions following on from this webinar, we'll see what we can do. My email address is on the screen. So thank you, everybody, and I hope you have a great day.